Hi, I'm Michelle Koppel. I'm an enrolled agent specializing in the Employee Retention Tax Credit. Today we're going to talk about the tax treatment of the Employee Retention Tax Credit specifically for nonprofits. Now, the IRS has not come out and made recommendations on how nonprofits should be recognizing the income. We do know from the publication from the IRS 2021-20 that for-profit organizations should be going back into the years where wages were paid that qualified them for the ERC and netting the refund against the wages. So in other words, if you had $100,000 worth of wages in 2020 and you got a refund of $25,000 for the ERC, now your deductible wages are $75,000. So you go back into the years when those wages were paid and the deduction for wages is reduced. That is spelled out for you in that publication at 2021-20, I believe it's page 13. But this does not really work for nonprofit organizations because the presentation and disclosure principles under the accounting guidance in ASC 958-31, 310-50-4 should be followed in recognizing the ERC. Again, that's ASC 958-310-50-4. So generally, U.S. GAAP, netting income with expenses incurred is not encouraged because GAAP generally does not permit net presentation on financial statements. Nonprofit entities must consider whether such presentation would be misleading to the financial statement user and would ensure adequate disclosures. So the AICPA has said that nonprofits should recognize a refundable advance until the conditions have been substantially met or explicitly waived by the donor, and that's ASU 2018-08. Once the entity determines that conditions have been met or explicitly waived, the revenue is recognized as earned and the refundable advance is removed. So the AICPA has stated that this is an unrestricted contribution. And if you were doing your 941X today, then in 2023, you would recognize it as an unrestricted contribution. Now, this is a different treatment than for-profits, and the IRS has not commented on it. Now, there were some questions where some people were saying you cannot double dip with the ERC and federal grant. So we had to look deeply into this. The CARES Act explicitly says you cannot use the same wages for PPP as you used for the ERC. You cannot use work opportunity wages for the ERC, but you can use some other wages in double dipping, such as R&D wages can be used for PPP. So it's not always a clear-cut thing to say we can't double dip. Yes, you can in some instances. So what we tried to do was locate the people who gave out the grants and ask them if they had any restrictions on the ERC. In other words, some of my clients received federal grants that were specifically for wages in the years 2020 and 2021, and they were worried, well, I have to go back and pay those back. So the first instruction then is really to go to that grant provider and ask them, do you have any restrictions? Is there any problem? And what we have found is those grant providers don't know anything. And this has been out since the year 2020, and they're having no restrictions. And so we wanted to be extra careful and extra conservative. And so I contacted some people in the Office of Health and Human Resources that provide those grants. And one of the people that I talked to a couple different people. Letitia, she is a senior grants policy analyst in the Division of Policy Oversight and Evaluation for the Department of Health and Human Services Office of the Grants in Washington, D.C. And I spoke with her and I said, we have clients, they don't want to be in trouble. They don't want to have to give the money back. What would be the point? Is there a problem? And she didn't really know right off the top of her head. So she talked around and she came back and she said, we are really not looking to audit people specifically on the ERC. We're just not targeting that at all. She said, we are very much aligned with the AICPA. They work very closely with the AICPA. And so if the AICPA is making this recommendation, they would be in alignment with that. But she said they have no real policy on it, and they suggested, again, go back to the person who's providing the grant to see if they had any restrictions within their grant. So if that person, as we found, doesn't really at this point have any restrictions, I would suggest that getting something written that they don't have any restrictions. I've had this, show you this email. I just had this email, had to write it to me in an email. We talked on the phone and I said, write it to me in an email, give me any guidance. And they're not looking for problems with the ERC, but it would be the grant provider. So there are special situations then for nonprofits. They do not need to go back and amend their tax returns for prior years. I think it's possible that the problem is solved if somebody's worried about double dipping. Just the fact that the AICPA says to record it as unrestricted contributions in this year, then how are you going to go back? I mean, we could create a mess if we were going to go back and deal with all the grants in the years 2020 and 2021 at this point, and audits that have already been performed. So I would check with your grant provider. We recorded in the year that it's substantially clear that the money is going to be received, and then we should be good to go. So thank you for listening. If you have any questions, please write below. Please give me a like to this video. I'm Michelle Koppel, an enrolled agent specializing in the employee retention tax credit. Thank you so much.